Hi, I'm Kep Kepner CPA here in Dallas. Well, at one time I had a client who was in the retail business, but he and his wife owned a business on the side. It was an Arabian horse breeding business. They had one mare, which was the mare that the wife rode all the time when she wanted to ride her horse. And the idea was they were going to breed this one mare to a stallion and raise little horses. Well, the fact of the matter is, the IRS looks really closely at that kind of thing to determine whether it's a hobby or whether it's a real business. Because if a business is really a hobby, you can deduct all your expenses up to the amount of the revenue. You just have a zero profit. And that's okay. But if you're a business and you have losses, you can write off the losses against your other income. In the case of my client, they didn't have any income in the 4 years they had this business because they had some foals that died, so they didn't have any income. They just had expenses where they kept the horse, all the feed, the training, and all of that. So in reality, if the IRS had looked at it, they would have said this was a hobby, and all those deductions would have been limited, and the client would have had to refile tax returns and pay tax on all those losses. Well, there was another couple, a taxpayer that lived in Illinois. They owned fast food restaurants, and they had a farm in Tennessee, and they leased their farm to an S Corp, and the S Corp bred horses. So this S Corp, they found a trainer to train the horses, and over a period of 15 years, this S Corp threw off all kinds of losses. So the IRS audited, and they said, well, we're in business. We hire a trainer. We feed these horses. They're on this farm in Tennessee. And it's really a business. We haven't made any money at it, but we're trying to. Well, the problem is they kept really shoddy records, and it seemed clear to the IRS, and the taxpayer couldn't prove otherwise, that there really wasn't a profit motive. To be in business, you've got to try to make a profit. You don't have to make a profit, but you've got to try to make a profit. So the IRS found that they actually didn't have a profit motive, and they had such poor records there was no way of proving that they were trying to make a profit. So they lost that battle. So then they said to the IRS, well, I want some credit because I have been paying tax on the rent where I've been renting the farm to the S Corp. So the taxpayers were actually paying tax on the rent, and they wanted credit for that. I'm sorry, they lost that also. The IRS knew that they had them at that point. They had a hobby, not a business. All the losses were gone, and too bad they didn't get credit for the use of the rental on the use of the farm. So when you start down a path of a quote business, it needs to be a real business. You have to have a profit motive. You can go for years losing money in a business. Some businesses do. But the IRS generally looks and says, if you've gone for 3 years and you haven't made a profit, then it may not be a real business. So one strategy some of my clients have used, they've started down the path of forming a business, operated for 3 years, and then shut it down because it, quote, they couldn't make it turn a profit. So that's one way to approach that. There are certain other kinds of businesses where the definition of a hobby may span more than 3 years. It may span 7 years or longer. That generally is true when it's something like a breeding operation, as in this particular case I described. So you really have to be in business to make money. And if you don't make money, you have to basically prove that you were trying to. And if you don't, you might be out of luck. So if you're a gentleman farmer wanting to have a gentleman's farm, we can talk to you about the impact of that. Give us a call. Thanks.